at the end of the day, again, recognizing the odds, you have to be able to sort out the winners from the losers. So what is your kind of criteria for finding the ones that work?
Thanks, Justin. Well, I wanted to start with that quote, chance favors the prepared mind, or luck happens, when you're prepared and the opportunity presents itself. There's all different versions of that quote. Um, and this is no different. I feel like investing the way that we learned from William O'Neill and How to Make Money in Stocks is doing the research, studying the charts, and being prepared. And
Hmm.
so what I'm sharing today is exactly what I did when I prepared for that CoreWeave trade. I already had an electronic rare jewel chart book created. And just quickly, for those that don't know, rare jewel is something that we studied. We talk about it more in our book, The Lifecycle Trade, but it's when an IPO goes up at least 100% from its day one close within the first 90 days.
Hmm.
And what we found in all the statistics that we ran was that if that happens, it has a twice as likely to gain 500% or more in its lifetime.
Hmm.
So you asked me earlier why study IPOs. Well, once we found this out, we're like, okay, well, rare jewels are definitely worth looking for.
That's an incentive.
That's an incentive.
Right.
So I would like to encourage people to consider creating an electronic rare jewel chart book, or just any chart book of, top stocks. It doesn't have to be recent IPOs. I mean, really, you should categorize them. Consider categorizing them. I have a PowerPoint that has like my IPO advanced phase. That's one of the phases we talk about in the book, which can contain that rare jewel, but it can also contain high flying IPOs that maybe didn't have 100% in the first 90 days, like Reddit or A-Lab.
Hmm.
And then have another category, another chart book of your successful institutional advance phase, after it's had that pop and then it's gone into that due diligence phase where it hasn't really done anything for a while. And then it has its next big run. And some examples of that would be Palantir and Twilio, which we're going to look at. And then so that way, whatever stage you're in and you see a stock that's presenting itself that could be like one of those, you can go back and reference them and know what they look like. As a trader, I've never really created programs. I don't run things to tell me when it's time to do this or that. I really like to use my eyes and study the chart and have it jump out at me so that I can recognize it, have that experience, and know what I'm looking for. So when CoreWeave came out, I was like, okay, I need to be prepared. So I pulled up that Rare Jewel IPO Advanced Phase book, and we're going to look at some of those today.
Hmm.
And what I look for is, what are the signals? What is the chart pattern? And I look at it on the daily chart and the weekly chart because they're different. They're not the same. And I know people love their daily charts,
Right. Hmm.
but I think the weekly has just as much credibility. And
Hmm.
I want to impart that on others for the buying and the selling.
Hmm. And when you talk about the daily and weekly chart, one of the things that you also are looking for are kind of these signals, right, that are happening on both, and you're looking at different time frames. So I guess before we get to that, like, how do you first decide what to put in that electronic chart book? And I love the fact that you use a PowerPoint because it's easy, and it's you can kind of keep it all in one place. You can take notes and the speaker notes, all of that. But how do you decide what goes in there?
Well, it's pretty easy. When you've been around for a little while, like myself, I put in there stocks that I've traded, or stocks that I've missed that I wish I would have traded. So like Palantir, I traded, so it's in there. eBay's in there. I did not trade eBay. I actually really wasn't trading actively back then, but through the research that we did through our book, eBay's in there. Um, an interesting one that we're going to look at, which I haven't thought about for years, but Corsair's in there. Believe it or not, Corsair was a rare jewel. Twilio. I did not trade Twilio's IPO advance phase, but I knew people that did, and I was like, oh, that's one I missed. I'm going to put that in there so I don't miss it again. So really, it's just about doing the homework doing the research, looking at some of those greatest opportunities, even, that the articles that Bill William O'Neill did that you guys are reposting, and just putting all the great stocks in there. And so that's how I decide. And I'm always looking and keeping track of that 90 days of any new IPO that's coming up, so that if I missed it, I know to keep my eye on it.
And are you looking for a certain percent gain, or is it just a simple matter of, gosh, I wish I had this one, or or I did make a lot of money on this one, and it goes in?
I mean, I am really good about doing my post analysis. So almost every stock that I trade goes in there. And even stocks where maybe it didn't have a great run, but it had a pattern that I saw that I start seeing and I recognize it. Like I'll even put those in there, like, regains of the 10-week moving average. Like, what do I want those to look like? And what
Mm-hmm.
does the volume look like? Or even 3 weeks tights or railroad tracks. I categorize a lot of things. And in fact, sometimes I'm just on my iPad and I'll snapshot it. And then I'll just put, now that you can put the metadata in the picture, I'll put
Mm-hmm.
railroad tracks. And then I can search the pictures of the charts on my iPad and pull up all the railroad tracks that I've seen. And again, just being familiar what they look like and like what happens after. Sometimes, the railroad tracks, we've talked about it, sometimes they'll still go up a little bit before they
Yeah.
come back down, or maybe even not at all. In general, though, I feel like the railroad tracks always are signals to the downside, but it's just a
And for
matter
those
of.
that aren't aware, railroad tracks
Oh
are a sell
yes,
signal that
right.
Bill O'Neill, he has that in his book, How to Make Money in Stocks. You can look at the fourth edition, the orange book, and it's not just a way to tell if you're a human or not. Like choose all the railroad tracks, whatever. So, um, but
Right.
okay, let's get back to the signal, because again, you're looking at a daily and weekly chart as you mentioned. And what signals are you looking for to, because you have all these different time periods after 10 days, 21 days,
Hmm.
50 days. What is it that you're looking for here?
Okay, well, for a really strong stock, it like CoreWeave, when we'll look at it, it didn't even break the 10-day moving average until after it was already up a couple
Hmm.
100%. Some will touch once and then keep going. Kind of like there's another rule too. People may or may not be familiar of it from some of the workshops that I learned, where, the first touch of the 10-week moving average after a breakout is usually okay, a good buy point. But then once you have your second and your third, they get less reliable. And I've noticed with these IPOs, you can also apply that to the shorter term moving average. So after 10 days, it may or may not touch the line, and then it keeps going, and then maybe the second or third it doesn't. But then you have the first touch of the 21 day, and then usually it'll bounce if it's a
Hmm.
strong stock, and then the next one maybe it gets weaker, and so on and so forth. So 50 days, 10 weeks, you generally see that, you can see that in IPOs, even in the short runs as well. Does that make
Hmm.
sense?
Yeah, yeah, yeah. And so again, you're using because again, after 10 days, after 21 days, are these the moving average lines that you use as well to kind of, you said support at the 10-day, or maybe support at the first 10-week touch. So
Right,
is this kind
exactly.
of your
I'm
guide?
I'm looking for the chart. I'm looking for when the 10-day first appears on the chart, and then when the 21 starts to present itself, 50 days, and usually the 10-week.
Hmm.
So the 10-week obviously is the longest one. So that has to be for a really successful IPO like CoreWeave that's going to be around that long. Some of them
Hmm.
aren't going to be around that long, but you can see a lot just from the 10 and the 21 day. So in that case, you really do have to focus on the daily chart when it's that early in the run.
Hmm.
But the weekly chart will still give you signals in the bars that we're going to look at as well.
The final point is the post analysis, as you
The
said.
final point is the
You love it.
post-analysis. Yes. I mean, I am such a strong believer in post-analysis. That's the only reason why I'm a successful trader, is because, and I worked corporate. I was able to retire from corporate. I'm just strictly investing now, living off and still increasing, my net worth as best that I can. But it's all because of post-analysis. I studied what I did wrong and I figured out how I could do it better.
Hmm.
And, I never even used to be able to trade a stock like CoreWeave. There would be no way, like 10 years ago. But now, with all the knowledge that I've gained, and just the fact that I love it so much that I just really just get into the study of it, I've been able to tweak rules and continually improve. I mean, we're never going to be perfect, but we can always look to improve. So even if you didn't trade the stock, you can still do a pseudo analysis on it. Well, if I had traded it, how would have I traded it?
Right.
And then what
Hmm.
kind of gains would that have gotten for you? And then how could you tweak that? And write it down on a piece of paper, put it in the PowerPoint. And then again, when that stock, a similar one comes that looks like that one, go back and review so that you're prepared and remember, because we don't remember everything. Remember what to look for.